Hello, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer, and if you have been with us for a while, you know exactly what we do here. We talk about stocks that have earnings during this week, and we discuss how to profit from those earnings announcements. And this week, the week of September 8th, 2025, we have just a smattering of stocks to select from. It features a mix of tech stocks, software, consumer reports, and a few others. It's not a big week for earnings, but still there's some key names. So we will go through the list and take a look at the last trade that we did, as well as a new opportunity to trade this week. Let's get rolling. Now, because we do talk about several stocks, we do have a chapter feature below, so you can jump ahead to maybe a name that you want to view. But here is the list of stocks that we have for this week. What we do is we take the whole list of stocks. This week there's about 78 companies that declare earnings. We are tracking about 25 of them, and then I take that 25 and I narrow it down to the best candidates for the various strategies that we deploy around earnings. And we break those strategies into two parts. We have the breakout stocks, which are on the left. These are normally stocks that move double digits around earnings. We're talking 10% or more. And then on the right-hand side, we have quieter stocks. Okay, maybe some familiar names, but they are more mature companies and they just don't move very much because of their size or their industry. All right. So as we get down into the list, let me give you an example of a quiet stock. We're going to start with this side of the ledger, and here's an example of Pfizer. All right, now Pfizer does not have earnings this week. In fact, Pfizer doesn't declare earnings again until November, but this is a classic example of what a quiet stock looks like. You can see the scaling on the right is in $2.50 increments. This stock just bounces around between $21 on the low side and $30 on the high side. And around the earnings, which I have highlighted with the ellipse, this stock moves just a couple of percentage points at best. This is a good candidate for a strategy, for selling strategies. So where we sell implied volatility around earnings. Why? Because implied volatility rises as we go into earnings around all stocks, and we sell premium on these candidates and take in that credit and look to profit when that IV drops on the backside of earnings. All right, so let's get to that list and really zero in on it. We just have a few candidates this week. Most notably, probably are, the most familiar name, really common, would probably be Kroger on Thursday. There's a couple of others. Manchester United, which if you're a sports fan, you may know them. This is the soccer club over that plays in the British Premier League. And they are also on our quiet list. And then some normal names like Casey's and Synopsys. But let's go ahead and take a look at the chart. And I want to show you what these look like. All right. So here we have, we're going to start off with Casey's. All right. So Casey's is actually going to declare later today, Monday, September 8th, after market close. The average move here is about 8%. Now, that's a decent move, but this is a $500 stock, okay? Maybe not a company you're familiar with, but yes, it's currently trading at $510. And you can see that it is normally pretty quiet for a $500 stock. Now, the last earnings event, it did move greater than average, but what we usually see with Casey's, if I kind of backtrack a little bit, is a move like this, where it just pops or drops just a little bit. It's not much of a big move. And we are not concerned about the resulting trend or the current trend. We are just concerned with the day before and the day after the earnings event primarily. So even though the stock has been consolidating here, we are looking at the average move combined with what the option market makers are pricing in, and it looks to be about 8% for Casey's right now. Okay, so the next stock we're going to look at is Synopsys. This is also a big dollar stock, $610. on for Synopsys. Now you can see this stock had a very nice rally going from about $475 all the way up to almost 650. Nice move here for Synopsys. It has been drifting lower here. We are, again, are not concerned about the overall trend. We are looking at a move of about 5% for Synopsys. Now they will have earnings tomorrow on Tuesday, September 9th, after market close. And here's the thing about Casey's and Synopsys. When you get up elevated into this level of price, sometimes the bid-ask spreads are pretty wide, and it does get a little difficult, even though we can go well above the money and way below the money to sell premium. Okay, which, by the way, we never sell premium naked. Okay, we always hedge it with long positions. The strategy in particular that we like is called an Iron Condor. Okay, that is our strategy of choice. Okay, so it does get a little difficult around stocks at this level. Normally, I like stocks between, say, $40 and maybe $300, somewhere in that range. And that takes us over to Kroger. Okay, the last stock that we'll talk about on our quiet list. Now, this stock looks pretty volatile here, but if you notice, my scaling here is just in $1 increments. So let me bring that down to $5 increments, because that is where I like to keep my scaling, just because I like to see what does this stock do on kind of a weekly basis in its statistical volatility, meaning its actual price movement. All right. And you can see that this stock is actually pretty quiet. It's been oscillating here between $67 and $75, and it has done that since its last earnings announcement. So Kroger is going to report Thursday, September 11th, before market open. So first thing in the morning on Thursday, and the average move here is about 6%. Okay, and market makers are kind of pricing that in right now, although I do see a little bit of edge in the options pricing. We'll talk more about that in a moment. Okay, but believe it or not, that's really it that I wanted to highlight for the quiet stocks this week. Even Manchester United was a little difficult to actually do an Iron Condor with, just because of where the option strikes are, as well as Sacos Energy, which is the symbol TEN that you saw. A little difficult to trade that one currently as well. So these are really the best three that we have from the quiet list for this week. That takes us over to our breakout stocks. Now, normally people love these stocks because they are big movers and they move wildly around the earnings. Let me show you an example of that. The example here will be Akamai. All right. This stock, again, does not have earnings this week. They will have earnings also in November. Okay, so we're still a couple months away, but you can see from the chart, and this is called statistical volatility, the volatility that we can see in a chart, that this stock is a mover around earnings. Okay, I have those events highlighted with the ellipse, and this stock is a notorious mover. And what we like to do here is even though implied volatility is elevated, we like to buy option premium here and look for breakouts on the stock. We do this through the use of Straddles or Strangles. Those are the two option strategies that we deploy here around these stocks. And we do this in a publication that we have called Delta Neutral Breakout. Now, for the quiet stocks, we do that through a publication called Delta Neutral Income. This one is Delta Neutral Breakout. We are looking for that breakout, and we hope that it happens. All right, so let's get into the charts, or the breakout stocks for this week. Sorry, and we do have some familiar names here. We do have Oracle, Chewy, Restoration Hardware, which is now called RH Holdings, and Adobe, just to name a few. Most of you might be familiar with LoveSac, but let's get into these individually, because AeroVironment is also a classic mover. This has earnings tomorrow on Tuesday. It will declare after market close. That is when they will report. And this stock has an average move of about 20% through earnings. And you can see the last earnings announcement here on AeroVironment. This thing went from 192 and closed higher at 234. the following day. And then look at the follow through here. Big day for a follow through. This is typical for AeroVironment. And we are looking for, again, a 20% move, which is being priced in by the option market makers, as well as this is the historic average for the stock. Okay. If we go back in time a little bit, yes, I have the last move. Last time, we had these notorious reversals. So you can see the big drop here. This thing was trading it closed at 141, then had its earnings announcement and opened the next day at 110. So from 141 to 110, it dropped. Then it rallied all day before closing at 135. So in the end, it went from 141 to 135. Those we do not like when that happens. We do like when we do get the follow through like this, big day up and then bigger day the next day. Those are good classic moves for these stocks, and we are looking for that. The problem is AeroVironment right now, I priced it out. The option market makers are pricing in that 20% move. And so there's not really an edge there for us to trade. All right. So just note that. All right. We're always looking for the best opportunities and the best edge. Now, Oracle, big name here. They will declare, this will be one of the featured stocks for this week, is Oracle and Adobe, which we'll get to in just a moment. Oracle will declare Tuesday, September 9th, after market close. So that'll be tomorrow. And the average move here is also double digits. It's going to be plus or minus about 12%. Okay. And so this is a $240 stock right now. And these two, so AV, so that we just talked about, and Oracle, these two Straddles and Strangles will be well over $2,000 for these. Okay. Very expensive. You will need a much bigger account to trade these if you were to trade them. But I can tell you, Oracle is also being priced in. That move is being priced in. And unless they do something remarkable or maybe disappoint, otherwise, this thing is going to move right in that average range of 12%. Again, a surprise could take this, maybe jump at 18, 20%, or a miss could make this drop equal amounts. It could drop 18 to 20%. But right now, they're pricing in that 12% move. Now, a much more inexpensive stock is GameStop. Now, this stock is noted for its historic moves around earnings. This is just a $23 stock, but the move is being priced in here. Now, GameStop will report tomorrow, September 9th, after market close. The average move here is about 14%. Even though, as you can see, this stock will gap down. Look at that beautiful gap there. And if we go back in time, this stock gets really volatile around earnings. And what we look for are follow-through movements. And so you can see this thing dropped down 2 earnings cycles ago and then went sideways and then rallied back up. Then the last earnings cycle, it dropped down and then just went sideways. Just no movement at all. So we will probably get the movement. I will look tomorrow to see where the pricing is. But right now, it's being priced in for that 14, 15% move that it normally does. And there is no edge there at this moment on GameStop. Okay. Now, Daktronics is also a historic mover. This is also a much less expensive stock. Around $17.52 is its last trade. They will have earnings on Wednesday, September 10th, before market open. The average move here is about 16%. Now, believe it or not, Daktronics has, right now, they're pricing in about a 12% move, but it's this last earnings event that kind of has me a little concerned, because you can see it did not, even though it gapped lower, okay, on the day. Let me zoom in on that here. Even though it gapped lower on the day, it rallied higher and then reversed here. And although this is a nice move from a low of, say, $13 to a high of $16 in just 5 days, that would be kind of a horrible trade for a straddle or strangle. That drop and reverse or pop and reverse. We want pop and follow through higher, or drop and follow through lower is what we want. And so this last earnings announcement does have me a little concerned. I may sit this one out. We are getting a little edge in pricing. As I mentioned, market makers are pricing in a move of 12% right now for the stock. Even though the historical average is around 16%, that does give us an edge, but that last earnings announcement does give me pause. All right. Now, Chewy. Chewy's a $42 stock. They will have earnings on Wednesday, September 10th, before market open. So first thing in the morning. If you're not familiar with Chewy, they are in the pet business, essentially consumables for pets, and well, also non-consumables, I guess, toys and chew toys, etc. But Chewy is a mover typically of around 12% through earnings. Again, Wednesday morning, September 10th, before market open. And you can see, again, the drop down. Okay, that was good for the last earnings announcement. We probably, I would need to go back and look. That could have been a profitable trade. But you can see then it just kind of went sideways and then reversed a little bit. And then we finally got the downward trend here. Again, we're not in this trade for this length of time. This looks good if you were a sell, kind of maybe a buy and hold, if you bought puts and then held on to them type of thing for 2 months, 3 months. We are not doing that. Okay, we're looking at an immediate pop, an immediate profit, usually closing it out pretty quickly within just a day or two after the earnings announcement. All right. Now moving on to LoveSac. Okay. Pretty popular company. Really have grown their business over the years. You can see that they are about a $20 stock. Okay. So not a very expensive stock. Look at this. They have an average move of about 24% around earnings. They report on Thursday, September 11th, before market open. So first thing Thursday morning. Last time they did have a nice drop, but again, they did have the reversal that we do not like. We go back in time a little bit. This is what we like. We like that pop and then a continued move higher. Okay. I don't know if that was quite enough to make a profit on the last earnings event, but we do like that movement around. And if you can get a trade off on a straddle or strangle that's below 15%, I would say closer to 12 or even 10%, meaning that's the move required to profit, and the stock moves 24%, that is where you make your big money on these types of trades. Okay. So yes, they will be pricing in these. And right now I'm not seeing an edge on a straddle or strangle for LoveSac, but we are monitoring that and we'll see how it plays out. Cause I do like these, stocks that are well below $100 because they're often a lot less expensive to trade with straddles and strangles. Now, the other featured trade for this week is Adobe. Okay, so we have Oracle and then Adobe both this week. You can see Adobe has been selling off here overall. Now, this has an average move of about 12% through earnings, and that's also the expectations for the stock. They're going to report on Thursday, September 11th, after market close. The key here is AI for Adobe and their adoption and implementation of AI in their business. We'll see if that comes to pass, but historically, you do see that we do get a little gapping around this stock. Sometimes it's better than average, and you can see these averages change sometimes. So last time, the expected move back in March was 14%. Okay. Now our expected move is 12. And that's because of this move right here. It just didn't move as much. And that dropped the average, and market makers adjust their expectations for a stock. So right now, Adobe being a $300 stock, again, you're going to run into another stock here that is a straddle or strangle. On this one is going to cost you well over $3,000. So I would be very careful with this. No small account should be trading a straddle or strangle on this around earnings. Other strategies could be deployed, but definitely not just a straight straddle or strangle unless you have a much larger account. Okay. So a much larger account would only be appropriate for these. And we're going to close out our list for this week with RH. Now, this is Restoration Hardware. Okay. They're now called RH Holdings. They are usually a pretty big mover. Now, I have traded this pretty consistently over the years, and we have a pretty good track record. The problem now is RH is getting pretty expensive, up here around $250. The expected move is still, look at this, 24%. Okay, big mover. Now they will report on Thursday, September 11th, after market close. That move of 24% is key. Now, this again will cost you between $2,500 and $3,000 for this trade. But if you do have a bigger account and you can get this at a decent price, let's say you can get it at $2,400 or less. Okay, so we want 10% of the value of the stock or less. That would be a deal, and I would look to do that. But you can see last time it did gap up a little higher, but then reversed right away. Much smaller move. You know, we do have these nice gaps again, going from 250 to, look at this, almost 150. This thing dropped. It doesn't look like that on this chart the way it's scaled, but this move right here is almost a $100 drop on a $250 stock. That is the move we are looking for. Those big gappers. Okay, that is a $100 move, and that would be, you know, what we would be looking for. So we do expect a decent move for Restoration Hardware, but again, I'd be very careful just because it is a very expensive stock. All right, so that is our list for this week. Once again, really the featured holdings are Oracle and Adobe. Those are the biggest large cap names that we have this week. We are in the twilight of earnings season. The rest of the month will be somewhat light, but we will always have key names declaring earnings. And we will always have, each and every week, we will have a big potential mover and a quiet potential mover each and every week. They never stop. Earnings season is, even though they call it a season, earnings never cease. They are constant. Okay. It's just that some weeks have many more companies declaring earnings than others. And that's why they call it a season. Right now, we're on the back end of that. We have 75, as I mentioned, this week. 75 or 78 that are declaring earnings this week. Next week, it'll be lighter. The next week, it'll be lighter. Okay. And we will have just a sampling, but you do want to join us each and every week because we always have a trade alert and we do talk about our past trades. So why don't we do that now? Why don't we talk about the last trade that we did? And that was on Urban Outfitters. Okay. Urban Outfitters, we did a long strangle on Urban Outfitters. This trade costs a little over $500. In fact, I think it was about $750 on that trade. Okay, not bad. You do need a little bit of a larger account to trade that. But this stock is a classic gapper. Okay, it does move. And so we placed this trade, again, long strangle. We bought premium. And let's see what the results were. Okay, we got the nice downward gap after earnings that took us down near our lower break even. We waited one more day and did get a follow through move to the downside, and were able to profit $150 on the trade. Now, that's not a home run by any stretch of the imagination, but we are looking for a profit. And in just 7 days of being in that trade, we were in there for about 7 days. That was a 21% return on risk. Okay. 21% return on the amount of risk that you took for just a 7-day window. Okay. I think many people would take advantage of that if they knew it was a consistent opportunity. All right. And Urban Outfitters does give us that normal, consistent activity each and every quarter that they have earnings. All right. So that takes us to our candidate for this week. All right. And what do we have in store for you? Well, we're going to go to the quiet side of the ledger. And as I talked about, I am seeing a little bit of an opportunity in Kroger. Now, Kroger, last earnings event, it did have a little bit of a pop. Okay. But normally, this is a very quiet stock around earnings. Its average move is about 4%, 4 to 6% around earnings. I think it bumped up to about 6% because of that last earnings event. But those are one offs. Okay. I've traded Kroger for quite a while. Now, this thing, when you price this out, this is an Iron Condor. So we're selling a call spread and selling a put spread. And we're doing it at the same time. So it's 4 legs. All right. And this is common. Every broker that trades options will have this strategy in their profile. Okay. They all know how to do it. Some do it better than others, but that's another story for another day. Okay. Now this thing here is the key. I'm only getting about 22 cents of premium. My spread here is $1 wide. I'm only doing $1 wide spreads here. So if I were to sell the 73 call, I'm buying the 74 call to hedge it. Okay. And if I'm selling the, let's see, what does that look like? The 47 put, then I'm buying the 46 put. Okay. Actually, that was wrong. My glasses are a little foggy, but that's just an example. Okay. So here we are. Every time the black line changes direction, again, just the black line changes direction. That's a strike price here. All right. So yeah, this is I'm only doing $1 wide strike. So the credit here was about 22 cents. If you do it 5 times, that'll be $110. And what we're looking at is very near term. So I would use maybe this Friday or a week Friday expiration for these. And what we're looking at is for a quiet move and then IV to drop. And then we keep the credit that we sold these for, and we get to put that in our pocket and show that profit the next time we talk. That's what we're looking for on Kroger here. Again, we're keeping our spreads just nice and tight. So again, my risk is very small, and then it only increases with every additional trade that you do. So if I did 5 contracts, it's going to be less risk than if I did 10. And if I did 10 contracts, that will be less risk than if I did 20. All right. So again, don't go crazy with this. This is an Iron Condor. We're looking for a nice quiet trade, and I will report the results to you next week. All right. So that is our show for this week. Please like and subscribe if you like what we do here, because I give you only the best opportunities each and every week, and I talk to them in detail, and I give a trade out each and every week. And I've got a free gift to you that is in the link below, so take advantage of that. And otherwise, have a great trading week, and I will see you again next Monday right here on Earnings Call. Take care.